What a week. A positive reaction to a very hawkish Jerome Powell, tailwinds for semiconductors, and a trade deal with the UK just to juice the markets. Still, while most things ended the week green, especially crypto, it wasn't enough to push the S&P 500 or the NASDAQ above the all-important 200 DMA. And that was even with Trump saying,
"You better go out and buy stock now."
Also, the 10-year and 30-year bond yield kept creeping up all week, and I couldn't confirm this, but from this document, it looks like the Treasury bought $20 billion worth of 3-year bonds, which would be the largest single-day injection since 2021. So what do we think? Can we muster enough momentum to push through key resistance, or are we going to get that double bottom scenario we discussed on Monday? We're going to discuss all that and look at the standout names for stocks, commodities, and crypto. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to The Trading Apologist. My name is Tom, and I hope you all had a wonderful week. I'm just going to be real with you guys. I was traveling yesterday, had some bad sushi, and my energy is really low. Hopefully I can get through this without any personal emergencies, but I've got my trash can here, and I'll cut out anything if it happens. Before we dive in, if you do find value in the content, please like, comment, or subscribe. It really does help this get out there to more people and means a lot to me personally. Also, there is so much happening every week that I've started posting more on my X account to give you guys more regular updates. So this week it was things like getting out of CEP, buying ASST. That was one you really had to be timely with. I got stopped out of my natural gas position because I moved the stop down to a risk-free trade, and it reversed on me, but I've still got my eyes on that one. I'm excited about it. So if you do want those more timely updates, go ahead and give me a follow there. I've put the link in the description down below. And that aside, today I'm not going to focus on the news too much. I really just want to talk about the state of the markets to really help us determine the most probable path forward in the week ahead. So as I mentioned in the intro, on Wednesday, Jerome Powell was in no hurry at all to cut rates. He was saying things like, the cost of waiting, it's fairly low, we think, and we're taking a stance of wait and see and watch, given all the uncertainties of the impacts of tariffs on the market. This was, of course, criticized by Trump, who would love to see that tailwind for markets and pointed out that all other major countries are cutting. So why was that so important this week? Well, normally, markets would have dumped on news like this, and after a small pullback, the day actually ended positive. So just like the good reaction we had the week prior on those negative GDP and employment news, this confirms that notable change in character in the market. Risk on is back on the menu. As I said on Wednesday's midweek update video, if the low from Wednesday holds, I suspect we're going to push through that 200 DMA and have more of a V-shaped recovery overall. But if that low from Wednesday breaks, I suspect we're going to go the route of that double bottom style scenario that we looked at on Monday comparing to 1998. So really mark that low from Wednesday on your charts for the S&P 500 and set an alert so you can be ready. That aside, the market obviously loved the UK trade deal announcement on Thursday, but it wasn't enough to get the indices through that key resistance. We'll look at that as we dive into the charts. However, a few key names did break out, and crypto in particular saw a big surge, with Bitcoin reclaiming $100,000 and holding strongly above 102.5K, which has been a key level at the time of this recording. So if we close this week for Bitcoin above 105, which would be very strong, I suspect we're going to be testing 117 or 120K before too long. The reason I'm focusing so heavily on crypto is because it normally leads markets. We saw that in 2022 as it led into the bear market transition. Then it led again in 2023 as things rebounded. It moved first at the beginning of this year as we start correcting into tariffs, and could it now be leading the way for the broader market to new all-time highs? It's certainly something to keep your eyes on, and despite it being considered a risk-on asset class, crypto has so many tailwinds right now from a regulatory standpoint, a corporate adoption perspective, and a nation-state adoption position. It truly is the mainstream adoption cycle for Bitcoin. For the broader markets to mirror this move, I suspect we'd need to see the Fed increase its balance sheet more, tariff policy ease, or rate cuts finally come through. But if we look at where things stand now, we want to be in those names with relative strength. If you remember from a couple of weeks ago, we went through and we did this exercise in relative strength where we looked at sectors and specific names. And to identify which ones were stronger, we looked at two key dates. First, November 4th, 2024, which was election day, and then April 9th, 2025, which was the tariff pause day. And even then, comparing those two dates and the percentage gain and loss, it was very clear that crypto and names like MicroStrategy were clear leaders, and we've seen that strength continue to carry through. Now, this strength, it's not going to last forever, and I realize some of you may not even believe in Bitcoin, let alone the broader crypto space, but it is a clear leader at the moment and has momentum behind it, which is a tailwind for us as traders and investors. I'd really encourage each of you to repeat that relative strength exercise on the charts that you're tracking. You can go back and look at those dates that we did previously, but I'd also assess this week simply by looking at which names responded most positively on Thursday and which names are sitting above or below their 200 DMA on the charts. And that will give you a good idea of which of your holdings are most likely going to see the biggest gains in the near term. I'll be looking at the names we've been tracking here with that lens on today, so let's dive into the charts and get right after it. Okay, so starting here on the S&P 500, you can see we still have that clear resistance overhead of the 50-week moving average and the 200-day moving average, and all this previous trading range here where we were anticipating selling volume. You can see we peaked our head just barely above the 50-week moving average, but then we closed back below, and today we had a little bit of a negative day on Trump saying he would put 80% tariffs on China. This was after more positive talk of negotiations potentially happening this week. But anyway, we can assess that more as we get into specific names to see who was impacted more negatively today versus other names. But here's that Wednesday low at 55.78. And I've marked that just with a white line here. And you can see it corresponds to the close of these two candles here from right before Liberation Day. So that is that support I was talking about. And you can see I have my alert set here. And if we drop below that, I suspect we are going to see another correction to double bottom, and I'll just extend this line out to give us a target. If we do correct, again, this gap fill here at 5,300 would be a target that would make sense. And then we would hopefully back test this yellow line for support. So if that happens, be on the lookout because any drop back down here could be a great point for entries. If we move over briefly to the NASDAQ, you can see very similar chart, but a bit more strength here as we've been saying all along. So we got through that 50-week and we tested the 200-day 1, 2, 3 times here. One thing you can be thinking about from a TA perspective, fourth time retests often have a chance of breaking out or a much higher probability. So if we see 1, 2, 3, next week we see a fourth time retest, the odds are that on that fourth time retest, we would most likely break through. But again, this is going to move along with what the S&P 500 is doing. And if we retest lows, just to recap, we have that 18,400 line here for that gap fill. That would be our logical target. And again, great entries to look out for here. Okay, I'm going to skip HSI today and just move over to SMH, the semiconductor ETF. So we continued our breakout. We are still below the 50% here, and this is coming from the all-time high of the sector to the correction low. And while we are seeing a bit of strength come in on those positive semiconductor news this week, I really would have expected to see the industry rally more. So I've got my eyes here on that 50% level, and you'll see that this weakness carries through to NVIDIA and other names that we've been tracking. It is definitely something notable that seemingly very positive news came through and the sector didn't react as positively as one would anticipate. Looking at the DXY really quickly, if we just zoom in, we did break through on Thursday as the rest of the market rallied and then back tested this former resistance for support today and kind of closed middle of the range. So keep your eye on this one, but it does look like it wants to at least test some of these highs next week, and we'll just have to see what happens there with the DXY. Okay, moving over to gold. Earlier in the week, it definitely had a strong rally, but it is repeating that pattern that we called out weeks ago where this looked like a blow off top. And we said the most probable thing is going to be some kind of consolidation. Now, we did break above the 50%. We're now in the lower half, but definitely keep your eye on this. I think it's going to continue to chop and tighten around this range before it makes a decision on its next move. But the thing I'm watching gold for here is as things were more uncertain into the start of the week and were more risk off, people started moving back into gold. And then as risk on came back in, you can see that inverse reaction. So this, along with bond yields, is just a very good barometer of the state of the market. Going over quickly to natural gas, and we've been scouting this head and shoulders pattern with a target way down here at $2.62. And I missed this initial entry, so I got in at the end of last week right here, and then we dropped down. I moved my stop to this line, and towards the end of the week, natural gas rallied and stopped me out. So it was a risk-free trade because I moved my stop down. I still think that this could eventually move down, and you can see we rejected at previous tops right here. So I'm keeping my eye on this for another entry next week. This head and shoulders pattern doesn't invalidate unless we break above the head technically. So if we see a rejection here, I've still got my eyes on it, and I would most likely try for another entry. And just to recap, to short natural gas, I'm using the KOLD leveraged ETF to do that. Okay, moving on to Bitcoin. You can see that very strong move we had up on Thursday, and now we're consolidating up above 102.5K, which is a key level. Any brighter blue or thicker blue line I have here is more of an important support and resistance. And I really thought at that psychological $100,000 level, we would see a bit more resistance there, but we just blasted on through, and this is showing excessive strength in the charts. We didn't even print any lower lows here in this consolidation, just moving up the whole time. And I'll jump into this in a second, just to give you a little TA insight on that section right there. If we close the week above this, particularly if we close above 105K, that would be a very strong sign. And then I would anticipate that before too long, seeing how this move is accelerating, that we would be testing that $117,000 to $120,000 range. And I'm not just flippantly picking targets. What you can do to project out where moves could go is you can take this low and you can project out to our high right here. And so that gives us our line, which, I'll just make white and a little thicker. Okay, so we have this line. And then what I'm doing is I'm taking the price increase of this line and I'm projecting it starting off the bottom of the move right here. And what you can do is you can project 50% of the move, 100% of the move, 150% of the move, which would get us up here to about 137K, which you can ignore this line. This is more of a logarithmic line. That's just one way to project out price action, is to take the first part of a move, correction, project it out based on the 50, 100%, 150% extension. Okay, just zooming into this zone as a bit of a TA study for you guys here. So how could you tell that this was most likely going to break up instead of down? Well, we had this clear zone of resistance here. So if I draw that in from this candle wick to the tops of these candle closes, you can just say, okay, this is our resistance zone. So as we're bumping up against that 1, 2, 3, 4, fourth time breakout here, a lot of folks will enter on momentum on a breakout. So that could have been an entry, but then, oh no, we turned around and we corrected back below it. And this would have been a point where maybe you're concerned that, are we going to break down from here? But these lows never broke any of these other swing lows. So that was an indicator to you that there was strength coming in right here. And then as we broke back out, that was the catalyst for the move higher. So even though you had a bit of a fake out, just looking at this breakout zone and assessing these lows as higher lows, not lower lows compared to any of these wicks down in the consolidation, would have told you that there's strength behind this move, and this is most likely a bull flag that is going to see continuation, and we saw just that. So I hope that was helpful. And just moving on to Solana here, and hey, guess what, guys? I pulled up a clean Solana chart for you. You are welcome. You can see Solana is still weaker than Bitcoin. Even though it moved up more percentage-wise, it's playing catch-up with Bitcoin right now, and it's below the 200-day moving average. Additionally, from this inverse head and shoulders pattern here, the target that we mapped out is right at $180, which is just below that 200-day moving average. We're moving up towards that. The correction right now is still grinding on upwards, so I suspect we're going to test that in the next few days, and that's where I would anticipate seeing some rejection. Beyond that, if we're just looking at the 50% of this entire move down to see where else we could anticipate some major zones of correction, you can see how that lines up with this volume cluster here. That would be at $195, so just below the $200 mark. And you can identify that potential resistance coming up both in volume, just looking back at historical trading ranges. The Solana correction here did form lower lows, so it was not as strong as Bitcoin. And I think you're seeing that also just generally in this chart. The correction is a bit weaker than Bitcoin. The moves are big percentage-wise, but there's a little bit more strength in Bitcoin, which makes sense just because of all the tailwinds it has. If we're zooming in really close, say we just want to get in on the 1 hour chart, and you're wondering how long this move can potentially last and what might be an indication to you if it's going to correct, well, you can see even in this sideways chop on the 1 hour, it's drifting upwards. So I suspect before too long, we're going to get this breakout to test the $180 range and the 200-day moving average. And you can also just draw a simple underside support line. So if we take the bottom of this move and we line it up with all those swing bottoms like that, So you can see boom, 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 how all those swing bottoms are touching right there. And you know what, let's just make this one transparent. So that's a simple way just to give you a feel for the trend. And you can set an alert on that too. If we break through this trend instead of breaking away, that would also be an indicator that some momentum is coming out of this, and maybe we chop around sideways or correct a little bit to test some supports before moving up eventually. And this kind of TA on the small time frames, even though I think the broader move is obviously up, can help you if you're just entering perps or doing things like that to anticipate what might be coming around the corner if you're just playing a move for a couple hours at a time. Okay, let's move on to MicroStrategy. I did not pull up a clean MicroStrategy chart. Uh-oh. You can see MicroStrategy broke out here yesterday along with Bitcoin, but given the size of the move on Bitcoin, I would have thought that this would be a much stronger move on MicroStrategy, especially given how it's been leading ahead of Bitcoin and showing more strength throughout this move. So speculation here, but I think Michael Saylor turned on the ATM and is ATMing right now into this strength in Bitcoin so they can acquire more Bitcoin. And I think that's the selling pressure you saw come through today on the chart. Do I think this is heading higher? If Bitcoin is heading higher, of course I do. But a little bit of consolidation or even some slight correction would be healthy for this, as I've been saying, to build structure. I wouldn't want to see it break below this $340 zone right here and these previous tops. Anything above that to me is a healthy correction. But if we break this right here, let's say 343 to be precise, that would be an indication of weakness in the chart, especially if it's correcting while Bitcoin continues to move up. So something to keep your eye on, but a little bit of a correction here is not a bad thing for MicroStrategy. Okay, moving on to Tesla now, names that are breaking out a little bit. And you can see on Monday we had this consolidation zone drawn that we were talking about, and we were just below the 200-day moving average. Today we broke through that. So you can see it was coiling and broke through. This is a good sign for the week ahead of hopeful continuation. I would have loved to see it close above that psychological $300 level, but we were pretty darn close today at the close. For me, it still has a little bit of work to do. We have that $315 level, but the $325 level, I think, is the stronger resistance overhead. So I'm going to keep my eyes on this one, but I'd like to see us break through that. And then beyond that, we're going up to 366 for our next resistance overhead. So Tesla's looking good, and we'll just have to see how this unfolds. Okay, going to another one that's been coiling and just broke out, we have Hood here. So you can see we had that inverse head and shoulders. Here's our price target at that $61 to $62. We were consolidating the last couple of weeks and we just broke out. We had a strong breakout and a little bit of a pullback with the rest of the market today on the tariff news. Again, these guys aren't beholden to tariffs, but when the market goes risk off, Hood seems to see some associated selling, but this is looking great to me right now. And again, we're targeting that $61 to $62 in the near term. So we'll see where that goes in the next week or two ahead. So going over to Celsius, we had that pullback the last few days into earnings on Tuesday, and then we had that dip overnight. It's not showing it here, but after hours, it got down to like $29. And I had one limit order set at 30 and change that filled for me. And then there was a strong bounce away. So often the first reaction to earnings is the incorrect reaction, and then the market moves in the direction it should be going. And so it was good to see this rebound. This whole sector has been quite strong despite other weakness in the economy. So I'm still bullish on this one, but it has work to do to break above that $39 to $42 range. And then it's clear skies up to that 50% level that we've had drawn in at $60. So I'm looking for that to unfold over the coming weeks and months, and I'm just holding on to my position for now on Celsius. If we go over to Deckers, this is a good example of another one that's breaking out and marching towards our target here of $137. But this one on the China tariff news today was impacted more than some of the other stocks. Just measuring that out real quick from top to bottom. That was about a 5% drop on Deckers there. So because of their overseas manufacturing, they were obviously more impacted by that, but it filled this little gap here that we had on the Thursday open. So I'm expecting this to kind of continue in this stair step up and hit our target here at the $137 range. Going over to Palantir. So this was one at the start of the week here where we had this big rejection, and then we almost had the gap filled on Thursday as the broader market moved back up. It just missed it by a little bit here. And right now, this is just finding a bit of equilibrium. I do think Palantir is due for a cool off, so maybe that's just more sideways chop, and then it figures out if it wants to break higher, or perhaps it could be more of a correction. I know that's really a non-answer. It's, hey, it could go up or down or sideways. It's just one of those patterns right now that doesn't have too much clarity to me. Of course, we didn't set a lower low as of right now, but it's just one that I'm keeping my eye on to see how the pattern develops. And then hopefully in the next couple of weeks, we'll have a clearer idea of what this one wants to do. Okay, last couple of names, CEP, which we assessed on Monday. And even then we said, hey, it broke below this 50% and closed. If it would have closed above 35, we would have felt better about it. And again, it is hard to do TA on a chart like this with not much history. But I said on Monday, if it can't close and hold above that 50%, that's a sign of weakness. And that's what it's been doing all week. We're on the 1 hour chart here just so we can see more detail. But we've just obviously been chopping around and consolidating under that 50%, and it hasn't shown much strength. So I would anticipate, honestly, more of a correction to come for this. You could say that this is some kind of crazy head and shoulders, but the target for that would put us below this breakout range at like $7 or something. So that's not necessarily a realistic target to me, but I mean, I could stand to be corrected. But again, just using this 50% tool without much historical trading data, you can see how this gives you a lead on markets if they're stronger or weaker. And if we would have bounced up and stayed above that $35 range and found support at the 50% and started grinding around, maybe drifting a bit higher, that would have given you a sign that there's more strength and this could potentially break out higher. But as it stands right now, I exited my position around $34 or so. So not much of a gain there from the low 20s where I got in, but still a little something. Okay, moving over briefly to ASST, and this was one that I got in earlier this week at about $2.75. I missed the initial breakout here, but again, limited trading history on this, but you can see how it's holding up stronger than CEP. So how am I doing TA on this? Well, I got out of half my position today actually, because we formed our first higher low and lower high. So that was an indicator to me that some momentum is coming out of this move. And then the other simple thing I did, granted nothing goes up in a straight line, but I just drew a bit of a trend line here. So it's not totally perfect, but if you lock it to these bottoms, you've got a general uptrend. And this breaking through was my first sign to pay attention. And then when it came up here and we formed a lower high, I got out in this range here on half my position. And now it seems like we may be tightening up. We need to see what it does next week. Could it consolidate and break out higher? Sure. But having almost a 3x in a couple of days, I don't want to leave those chips on the table. So I took half off and said thank you and walked away. Okay, so that's it for the weekly wrap up. The names that you're in, take a look at those charts, see which ones responded positively on Thursday, which ones weren't as negatively impacted by tariff news today, which charts are above and below their 200 moving average. And I think you'll be able to easily identify which names you'll probably want to double down on if there's a bit of a pullback. Right now, I'm in a bit of a wait and see stance to see which direction the market is going to take. If we do get that double bottom, I know which names I want to deploy more into, and I'm ready to do that. If we do just move away from here, then I'm looking for weekly consolidation on the names I follow. And that weekly consolidation and that first correction to set a higher low in the big uptrend, that would be my entry then. And yes, I'd be getting in at higher prices, but it would be a safer entry than right now, just chasing the pump and not knowing where that correction is going to come in at. Anyway, I hope that's helpful. Sorry for a bit of a lack of energy today, but I should be back up to 100% on Monday, and I look forward to seeing you guys then. Have a lovely weekend. Bye for now.